Okay, the Federal Reserve just came out with its quarterly data on the wealth of American households. It's mostly the headline numbers that are being displayed in the media, how much wealth American households have, namely a new record of $107 trillion. Thank you, Fed, QE, interest rate repression, and wealth effect. But the Fed's data also shows the wealth distribution. Everyone knows if you're at the bottom 50% of households in terms of wealth in this country, you're essentially screwed. At the bottom 50%, you're chasing after the American dream, and while a few are able to get out of the bottom 50%, for most, the American dream remains just a dream. But the share that the bottom 50% of households have of the overall wealth, that record $107 trillion, is minuscule. It's just 1.9%. That share is down by half from the already miserably low levels of 1999, according to the Fed's data. So those folks in the bottom half of households are screwed, and we know that. But today we'll take a closer look at the top 50% to 99% of households by wealth, because even their share of the wealth is now declining, while the share of the 1% is surging. Now the 50% to 99% is the upper middle class and the top of the middle class. And they're losing out to the 1%. And it's a big deal in terms of dollars, because those households have a lot of wealth, but their share is shrinking as the share of the 1% is gaining. In other words, this economy, and I will point my finger straight at the policies of the Federal Reserve, is set up to shift an ever larger share of wealth to the top 1%, away from everyone else, according to the Fed's own data, and the Fed is even bragging about it. I'm Wolf Richter, the publisher of WOLFSTREET.com, and you're listening to the Wolf Street Report. It's Sunday, November 10th, 2019. We already know what is happening at the bottom half of households. They've always been screwed, and they're just screwed even more today than they were 20 years ago, according to the Fed's data. The bottom half of the households owns 6.1% of all assets that Americans own. They own just 2.2% of all stocks and stock mutual funds. They own just 2.7% of what the Fed calls pension entitlements. The gold-plated executive pension plans are only for the few. They own just 13.5% of all real estate wealth. They own just 0.1% of the private business wealth. But in terms of debt, the bottom half of households carry 36% of the total debt, such as mortgages, credit card debt, auto loans, and student loans. So they own 6.1% of the assets, and they owe 36% of the debt. And the wealth of the bottom half of households, wealth being assets minus debt, amounts to just $2 trillion, or 1.9% of total household wealth. These are the people who cannot save anything because their expenses for housing, healthcare, education, transportation, childcare, etc. are eating up their income. And because they cannot save anything, they have no means to invest. The whole system is set up that way. Healthcare expenses cost roughly the same for rich and poor. The problem is that healthcare expenses are enormous in the United States and become an affordability issue at the bottom half of households, a huge burden. And lots of people struggle to pay for it or cannot afford it. The healthcare sector is now around 18% of GDP, or nearly $4 trillion a year. This business has become immensely profitable, with its monopolistic structure, its constant mergers, its abuse of patent system to prolong pharma monopolies, the outrageous hospital bills as hospitals have become integrated into corporatized medicine, and so on. Paying even for basic health care has become a nightmare for the bottom half of households. For the lucky ones who are covered by an employer health plan, family coverage costs the employee on average $6,000 a year, according to Kaiser Family Foundation. This is just the insurance premium. Then there are co-pays and deductibles, etc., and those deductibles can be thousands of dollars. For families without employer health coverage, the premiums alone for reasonable insurance plans run over $20,000 a year. Then there are housing costs, whether people own or buy. They have surged in many places in the country. And for the bottom 50%, paying for a roof over their head in a lot of places is straining budgets or exceeding budgets. Just check out the thousands of parked vehicles that people live in around Silicon Valley, San Francisco, and other places. These are people with jobs that cannot afford housing. The cost of higher education has become a huge burden at the bottom 50% of the wealth scale. This burden is carried by the family that now sacrifices in many other ways, and it will be carried by the student who will end up with a pile of student loans. It boils down to this. The households in the bottom half of the wealth spectrum are spending all the money just getting to the next paycheck, and they cannot accumulate money to invest, and they cannot benefit from the Fed's ingenious wealth effect. The wealth effect is reserved for the already wealthy, for those that have the most assets. And when asset prices surge, those that hold the most assets benefit the most. So now let's look at the bottom 99%. And I mean, this sounds really funny, the bottom 99%, but that's what it's coming down to. And we'll look at the 1% to see how the share of wealth has changed since the Fed started its wealth effect, QE, and interest rate repression. And we may soon add to this strategy the fantastical repo market bailout. So over the past 10 years, the Fed has engineered an enormous amount of asset price inflation. And over those 10 years, the wealth of the top 1% has soared by $18 trillion to $34 trillion. The wealth of the next 9% has soared by $16 trillion to $39 trillion. The wealth of the 50 to 90%, so that's the upper middle class, has risen by more than $13 trillion to $31 trillion. The wealth at the bottom half of households has ticked up to $2 trillion. That's all they have, $2 trillion, a tiny fraction of the wealth of the 1%. In terms of percentage share of all household wealth, it looks wacky. The top 1% share of household wealth over those 10 years increased by 5 percentage points to 32%. The 1% now own nearly 1/3 of total household wealth. But over those 10 years, the share of household wealth of the next 9% fell by 3 percentage points to 37%. And the share of the 50 to 90%, the upper middle class, also fell by 3 percentage points to 29%. Today, the share of the 1% is nearly 4 percentage points higher than the share of the 50 to 90%. Back in 2002, it was reversed. The share of the 1% was about 10 percentage points lower than the share of the 50 to 90%. The first time that the 1% had a larger share of household wealth than the 50 to 90% was in 2013, and the gap has ballooned since. So what's going on here? How is the 1% able to hog more and more of the household wealth that the Fed has so strenuously inflated at the expense of the next layers down? There are several factors. The Fed's interest rate repression has destroyed returns on bank savings products. Households own about $10 trillion in these savings products, such as CDs and savings accounts. These types of products are a classic way of saving money at the lower levels of income, and people have mostly gotten screwed doing it. The stock market is open to all who have money to invest, and returns have been huge since the last collapse. And those with the most money to invest in stocks gained the most. But the wealthy have access to other types of investments. Many hedge funds, private equity firms, and venture capital funds require a $5 million minimum investment. Households that don't have that extra $5 million to invest, in addition to their broader investment strategies, are excluded from this club. There's a very small group of people who are super wealthy, who are billionaires and multi-billionaires, such as Amazon's Jeff Bezos or Warren Buffett and others. Some of them, like Bezos, have made their money on the immensely inflated stock price of their companies. Warren Buffett's entire financial insurance empire got bailed out during the financial crisis, and he's probably the single biggest beneficiary of those bailouts. Then, after the bailouts came QE, and his finance and insurance empire hugely benefited from that. Then there's stock compensation plans. This includes people like Tesla's Elon Musk. Tesla has been a financial nightmare throughout its entire existence, but its shares have been pushed by hook or crook to a valuation of $61 billion, and Musk has already awarded himself a bunch of them, and in addition has given himself an extraordinarily rich share compensation package valued at $56 billion that is now heading to court. While Tesla fans have to buy shares, Musk just gets them, to the tune of billions of dollars. This principle is spread far and wide, with stock compensation plans at the top of corporate America. Then there's the startup craze. Even if the shares flop after the IPO, the pre-IPO investors, such as VC funds, have made huge returns. These funds hold money that was invested by the top 1%. Again, a big minimum investment is required. Small fry cannot play in the VC arena. And there are the stock compensation plans of the startup craze, where early employees make out with huge stock positions after the IPO. These are also part of the 1%. But this money at the top gets plowed into various real economy things, such as housing, and is one of the reasons why housing costs have skyrocketed over the past 5 years in areas where this wealth is, such as in the San Francisco Bay Area. This is where the bottom half of the households suddenly find themselves tangled up in a housing crisis. It is ironic that the Fed puts out this data on a quarterly basis, as if to show off its handiwork. Its success is measured by how much of the wealth is increasingly concentrated at the 1% of the households, and how every time their wealth appears threatened, even a tiny little bit, the Fed comes up with new bailouts, new rate cuts, and other shenanigans, such as the repo market bailout recently. This data is like a report card that the Fed issues of how successfully its policies help the 1% gain an ever larger share of household wealth. I'm Wolf Richter, the publisher of WOLFSTREET.com. Thank you for listening to the Wolf Street Report.